Chapter 2, Review of Accounting Process. In Chapter 1, we learn that the product of financial accounting is financial statements. In this chapter, I will introduce how to prepare financial statements, including income statement, statement of stockholders' equity, balance sheet, and statement of cash flows. A statement cash flow is a financial statement derived from both income statement and balance sheet, which will be introduced later. So accounting process includes a series of procedures, starting from transaction analysis, journal entry, posting, then we generate the trial balance, etc. and etc. Finally, we can prepare financial statement, then we close the temporary accounts and prepare for the next accounting cycle. So I will introduce how to prepare financial statement manually through the raw material of financial statements, the transactions and events. Although these procedures are implemented by machines nowadays. First, let me show you all the procedures I will introduce in this chapter. And there are total 10 steps in 3 different stages. The first stage is during the accounting period. This period or this stage starts from the first day of accounting period to the last day. During this period, we mainly focus on the external transactions that are related to the company's day-to-day operation. External transaction represents the transaction with other business entities, government, or individuals, and these transactions are documented. By analyzing the document, we can make journal entries and the follow-up steps. The next is at the end of accounting period. After we have the financial statement, we also need to do some work. Totally 10 steps. The first step, we start from the first transaction occurred during this accounting period. After step 10, we are ready for the next accounting cycle. The accounting procedures will be repeated every accounting cycle. Depends on how frequent the company file their financial statement. Let me introduce each step. First, the business should document all the transactions with external parties. These documents are raw material for accountants and inputs for accounting processing cycle. These documents can be in the form of receipts, invoice, contract, or agreements. And then we analyze each transaction and make journal entries. Journal entry is to record the transaction into a journal chronologically. Then we post the information from the journal to the general ledger. The purpose of step 4 of posting is to obtain the balance of each account. After we have the balance of each account, we can organize them to prepare the first trial balance, which is unadjusted trial balance, because we are going to make an adjustment later. So we will have adjusted trial balance in step 7. The purpose of trial balance is to check whether we have any errors or not in the prior steps. Next, we will make adjustment to the financial statements through adjusting journal entries. This is the second time we do journal entry in the accounting cycle. These adjusting entries mostly based on the internal transactions or internal events. After this adjustment, we will also follow the step 4, post the information from these journal entries to the general ledger again. Some accounts in the general ledger may be updated, or you will also see some new accounts appeared in the general ledger. They are not from step 3, but step 6. Then we have the balance of each account in the general ledger. Again, we can prepare the second trial balance, adjust the trial balance. The reason is Step 6, adjustments. The trial balance after adjustment, so it is adjust trial balance. This trial balance is very important because it is good to prepare financial statements. After we prepared financial statements, you may think, okay, we are done, right? Actually not. We should prepare for the next accounting cycle. We also need to do step 9, the closing journal entries, to close all the temporary accounts to retain earnings. A permanent account in the balance sheet. I will introduce both permanent account and temporary accounts later. To close these temporary accounts means their balance changed to 0. Their balance transferred to return earnings. After we close all the temporary accounts, we only have permanent accounts left in the general ledger. We repeat step 5 again, then we can have the third trial balance. We called it post-closing trial balance, which is after the closing journal entries. In summary, there will be 3 journal entries. We will do journal entry 3 times. The first is step 3. This is based on external transactions. And step 6, adjusting journal entries. This is based on internal transactions or events. The last is closing journal entries. Following the journal entries, we also post the journal entry information to the ledger 3 times. And also we will have 3 trial balance. After step 10, we are ready to go for the next accounting period, or we will start next accounting cycle.